Hello and welcome to Rajput Jain and Associate. Today in this video we will discuss about the meaning of advance tax along with the advance tax due date, payment structure and the procedure for making payment for advance tax. So let us begin with the meaning of advance tax. Advance tax is basically the amount of income tax that is paid in advance rather than a lump sum payment at the year end. Advance tax is also known as the pay as you earn scheme. Advance tax is to be paid in installment as per the due dates decided by the income tax department. So, why is advance tax important? Advance tax is the income tax that is paid in advance for the income earned in a particular financial year. Usually, the tax is to be paid when the income is earned, and that is why this tax is called as earned tax or is also called under the pay as you earn scheme. Under the income tax provisions related to advance tax, the payer has to estimate their income for the entire financial year, and based on such an estimate, the tax is paid at specific time intervals. Here it is important to note that the taxpayer estimates the income and then calculates the estimated tax on it to check whether he or she needs to pay the advance tax and the amount to be paid. Next comes who is liable to pay advance tax. So as per section 208 of Income Tax Act, every person whose estimated tax liability for a particular financial year is Rs 10,000 or more, the same is liable to pay his tax in advance. Now there are certain persons that are not required to pay advance tax. So a person whose estimated tax liability for a financial year is less than Rs 10,000 or a resident senior citizen who is not having any income from the business or profession is not liable to pay advance tax. Now, why was advance tax introduced? So, the advance tax was introduced mainly in order to provide a regular supply of income to the government and also to reduce the burden on taxpayer from making lump sum payment after the end of a financial year. Thus, to reduce the one-time payment burden and to provide a regular flow of income to the government, advance tax plays a very important role. Next question arises, what is the mode of payment of advance tax? So as per Rule 125 of Income Tax Rules 1962, a corporate payer is required to pay taxes through the electronic payment mode using the internet banking facility of their authorized banks. Any other taxpayer liable to pay advance tax can pay the tax either by electronic mode or by physical mode, that is by depositing the challan with the receiving bank. Next question arises, when to pay advance tax. So the advance tax is required to be paid in 4 installments in a particular financial year. The first installment is required to be paid by 15th of June of that financial year for which the income relates, and the amount of tax be 15% of the total tax liability that has been assessed by the taxpayer. Second installment shall be paid by 15th of September and the amount of such tax payment shall be a total of 45% of the total tax paid. Third installment is required to be paid by 15th of December and the amount of tax paid be such that a total of 75% of tax liability is paid. And lastly, the fourth installment be paid by 15th March in which the full amount of the tax stand to be paid. Next, we come to the process for making payment of advance tax. So, the advance tax can be paid online as well as in offline mode. Now, in order to pay online, the applicant would be required to first log into the income tax portal. After that, they need to click on the e-payment of taxes button. Then, under the service tab, select e-payment option. To pay advance tax, select Challan 280. Fill in the required details. Then, choose the net banking option to pay online. And after successful payment, a challan certificate will be displayed which will contain the information number, payment details and the bank name via which the e-payment has been made. This certificate is proof of the payment that has been made. Now the next mode is the offline mode of payment. So for this, the taxpayer is required to take the printout of the Challan 280. After this, they need to provide the details as required in the challan, and finally submit the challan along with cash or cheque at any bank branch that receives income tax payment. Lastly, we will discuss about some of the frequently asked questions on advance tax. First one is, who is advance taxpayer in India? So advance income tax applies to all taxpayers whether salaried, freelancers or businesses. However, senior citizens who do not run any business are exempt from making the payment of advance tax and may file their returns normally at the end of the financial year. Next question is, do HUF need to pay advance tax? So as discussed earlier, an SSC having estimated tax liability of Rs 10,000 or more would be liable to make the payment of advance tax, and under the definition of SSC, HUF is also included. Thus, we can say that HUF would also be required to pay advance tax if their estimated tax liability during a financial year exceeds Rs 10,000. Then comes, do salaried employees have to pay advance tax? So as per section 208 of Income Tax Act 1961, advance tax liability arises only if the estimated tax liability is more than Rs 10,000. Now, in case of salaried employee, TDS is deducted every month from their salary, which is also a kind of advance tax. So, for a salaried person, if the estimated tax payable after considering TDS is more than Rs 10,000, then they have to pay advance tax. Next question is, what happens if I don't pay advance tax? So, where a taxpayer have to pay Rs 10,000 or more in taxes in a financial year, advance tax may be applicable to you. Advance tax means paying taxes for the tax due on due date provided by the Income Tax Department. However, if you do not pay advance tax on time or default completely, you may be liable to pay interest under section 234B. Next question is, will an NRI be liable for making payment of advance tax? So, answer to this is that there is no separate provision for NRI in Income Tax Act regarding the payment of advance tax. As per section 208 of Income Tax Act 1961, an SSC whose income tax liability exceeds Rs 10,000 is required to pay advance tax except a senior citizen who is a resident in India and does not have an income from business and profession. Thus, an NRI having a tax liability of 10,000 or more would be liable to pay advance tax. Next is, what will happen if a taxpayer fails to pay advance tax? So if any taxpayer fails to pay advance tax, then the same would be liable to pay interest for the non-payment of advance tax at a simple interest rate of 1%, and that would be leviable under section 234B and 234C on the amount of the advance tax liability that has remained unpaid. So this was all about advance tax and its various aspects. In case of any query, contact Rajput Jain & Associate, or you can also visit our website www.carajput.com. Thank you.